Thanks, Paul, and thanks to all the experts for the knowledge you already shared with us, and also for pointing out that we can and should do a lot more to fight against the power of oligarchs. Now it's about Russian oligarchs, but the issue is much broader than this. I would like to ask Richard Murphy about one issue more on the scope, besides of an exchange of information and all the points you all already made, because my feeling is that what makes certain EU member states interesting for Russian oligarchs is the lack of wealth, inheritance and capital gains taxation, and there is no real EU action when it comes to tax those kinds of taxation matters, and many EU countries, but also colleagues in the European Parliament, actually think that this is like something which is up to the member states to deal with. So I would like to hear your opinion on this. Do we need also to have like more action when it comes to a European tax framework by, for example, proposing a European wealth tax, an issue like the financial transaction tax, and some other elements? That would really be interesting to hear your opinion on this.
Thank you very much for the question, and it's a good question because it highlights one of the critical problems with information exchange, which is quite simply, if you have no information, you can't exchange it. And the fact that very many European tax authorities, but also company registries, do not collect enough information on issues relating to wealth and assets means that the information exchange system is ineffective. That is why I did mention when I was speaking that we might need to use alternative smoking guns to indicate that there's a problem. In other words, data on banks, sums deposited, data's on bank balances and so on. We have to work around this problem. But particularly important is the fact that we do, for example, have many company registries that aren't worried if a company says it's not trading in the country in question. I will tell you, the UK tax authorities do not try to collect tax returns from companies who declare that they trade wholly outside the UK, which might mean they trade in Europe or in Russia, because there are many Russians who buy UK companies, but we have no data on those companies because the UK tax authorities will not ask for tax returns for those companies because they say there is no money owing in the UK. But that ignores their obligation to collect information to share with other authorities. In other words, there is a failure to consider the interests of other countries in this, and I think that's universal, that the focus of all tax authorities is on the domestic and not on the universal. And that is why I think you're right to say there needs to be European regulation to address this issue, because this is not just an issue that I know locally here in the UK, but I know it exists in other countries in Europe where there are deficiencies as well. I don't know that necessarily means there needs to be a wealth tax everywhere. I think there needs to be effective taxation of wealth everywhere, and that is different, because right now we massively undertax wealth anyway. We give it lower tax rates than the taxes due on labour, which in my opinion, and I'm not a Marxist, is absurd. I think that there are many issues that we need to deal with around this area which could be dealt with first. But what I do think is important is that actually we do remember to begin to change our focus. I've been involved in tax justice now since March 2003, which was the month we launched the Tax Justice Network, the first ever campaigning organisation on this issue. So we're now 19 years into campaigning on tax justice. My point is that during that time, most of the effort has gone into international tax abuse, most of the effort has gone into corporation tax, and most of the effort has gone into tax havens. But actually, we do need to focus very heavily on domestic situations. And here I would mention something that's really important, and if I don't get it now, I'll mention it in the wrap-up, so I'm going to do it now, and that is resources. Most tax authorities in most countries in Europe, and I have looked at this, are massively under-resourced, with governments trying to reduce the amount of resource supplied. That is completely crazy. in my opinion, because it undermines their own economic stability. It fails to support honest businesses. It fails to detect crime. It fails to deter anyone. And therefore, I would beg that actually not that we actually go, first of all, to create new taxes, but that we actually create effective tax authorities that collect the taxes that we have and collect the data that we need to stop the crime that is undermining all our tax systems. That's the direction of travel I suggest you should be looking at.
And then I have a further question to Theresa Neef on the question of the wealth registry. As Greens, we are heavily supporting a wealth registry, not just at a national level, but on a European level. But I would like to hear from you where to start, besides an exchange of information. Do you think we should start with the real estate sector, or what do you think? Where would it be best to address this? Also to start and at least to ensure that some of the wealth will be registered in the whole EU and not just in some of the countries.
I think the answer to this question can be my final remark. I will wrap up by saying, so the question was where to start to establish financial transparency. And I think you in the FISC committee have a lot more information and also ideas than I do at the political level, but I can suggest something, and this would be the main starting point should be the legislation you already have in the anti-money laundering directive, in the directive the DAC, and also in the Unshell directive that is currently discussed. And then I think there are two steps we can do. The first thing is to ensure the quality of the data that is already available in the beneficial ownership registers, but also in the automatic exchange of information under the DAC and under the common reporting standard. Because what I've seen when I went through the documents, the implementation reports, is that several people pointed out that there's hardly any information on how effective those measures are. And so we really have to see how effective those are. There should be some kind of mechanism to check its effectiveness, to see if the data is of high quality, showing, for example, the beneficial owner quite accurately, but also that in the automatic exchange of information, that the data is really, like the big bulk of the data that is available is exchanged. And the second step would be to close the blind spots we already see. And as I underlined in my initial statement, real estate is the big blind spot we see in the anti-money laundering directive, and we see in the DAC currently, and also hard assets are a blind spot. So, and to look for those blind spots, I just want to underline the three criteria for comprehensiveness I said, or I pointed out in my initial statement. It should be comprehensive across all asset types. So we've seen that we have some financial transparency in financial assets, but not in real estate and hard assets. It should be comprehensive across legal forms. So we see that we now have the beneficial ownership register for companies incorporated in the territory in EU member states, but a lot of non-EU companies and trusts that hold assets in the EU are still not covered, and it should therefore also comprise or be comprehensive across jurisdictions and the legal form, to comprise those non-EU trusts that hold real estate in the EU. Yes, I think that comprises it quite well.